Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Isabelle Freidheim, serial entrepreneur, investor, and SPAC and IPO expert to discuss opportunities and risks in the SPAC market and how it is transforming. Isabelle, it's great to have you with us. Welcome to Trade Talks.
Thank you.
You got it. And let's get your outlook on SPACs and IPOs for 2023 and beyond, as it feels as if we've been in somewhat of a holding pattern.
Yeah, that's interesting. I'd bifurcate the question into two parts. One, there have been exceptionally few IPOs of companies or SPACs, and the IPO window has been shut for quite some time now. IPOs are down from where they were 2 years ago. But two, as it relates to companies going public, SPACs have continued to dominate. Year to date, there have been about 90 SPAC combination announcements. That's 10 times as many companies accessing the public markets through SPACs than through traditional way IPOs. So my outlook is that it will continue through the end of the year. And if a company wants to go public, they pretty much have to do it through a SPAC at this point.
Isabelle, why do you think that is versus going the traditional IPO route?
I think the greatest opportunity now for companies is to tap into a market and be the first one to tap into what is the deepest pool of capital by going public. And for SPACs, there's very little competition in terms of facilitating access to public equity markets right now.
What are some of the opportunities and risks in the SPAC market? Do you think some of the headlines that we see in financial media are a bit unfair to the SPAC space?
There's a dwindling number of SPACs. The supply of companies that are seeking to go public is growing as the IPO window remains shut, and the number of avenues to go public dries up with announced deals and on the other hand, liquidations of SPACs that don't have the requisite capabilities to effect a transaction. On the risk side, there's a hangover in terms of post-combination performance. In post-IPO performance, but therefore the PIPE market has dried up. And all the factors that we know that contributed to this difficult market environment, that's inflation, that's rising interest rates, fear of recession, and so on, that created a risk-off posture for investors. And tech companies that IPO'd or combined in a SPAC, and particularly where there were no revenues, got hit the hardest. So PIPEs or equity investments into SPAC deals at the time of close at the agreed upon valuation has disappeared. That market is down over 95%. So if a SPAC sponsor doesn't have extraordinary deal flow, the right relationships, the capital providers, and a full-time team that can structure and innovate, then they won't be able to effect a combination. And this pressure that we're seeing has allowed us at Athena to establish the Athena brand, now synonymous with capable execution.
What type of transformation are you seeing in the SPAC product?
We're seeing in interesting transformations are, again, at the back end where we raise capital in very structured products, whether that's debt or equity, and as well as in the structure of SPACs. And that is a rapidly evolving market. It's a very efficient market that hasn't so far needed much intervention from regulators, that has adjusted on every end of the spectrum from IPO formation to exit.
Isabelle, have you seen a difference between domestic and international markets? Is one more attractive than the other?
We're seeing a lot of opportunities in international markets right now. We have ourselves have announced a combination with the German electric vehicle company Ego, and we've announced another combination with a company based in Abu Dhabi that makes water from humidity, the Air Water Company. We're seeing attractive deals. The IPO market is actually very happening in Asia, a lot of companies going public. And so we think that there are very attractive valuations, companies that are more mature, which is what investors are interested in right now, companies that are generating revenues that are close enough to profitability, if not already profitable. In other words, more boring companies.
Tell us about Athena SPACs a little bit more. How are you standing out in front of investors?
Well, we have handled more than $3.5 billion across our various Athena SPACs. Our members have participated in 10 SPAC transactions that represent just under $20 billion in aggregate enterprise value. The Athena network has 15 CEOs, a dozen company founders, some who have exited their own companies via SPACs. We have north of 10 Fortune 100 company board members. And in 2021, Athena also became the first all-women SPAC to announce a business combination when we took Heliogen public, which is an AI-enabled, at the time $2 billion company, AI-enabled solar company. And we have been able to provide quick quality results with deals announced, record-breaking for a first-time SPAC during a down market, and now with more recent announcements. But we have had the first Black woman CEO to ever ring the bell at the New York Stock Exchange, the first Korean American woman CEO, the first all immigrant SPAC. So we've had a tremendous diversity, but importantly, the capabilities to really deliver on helping companies who transition to publicly traded companies.
All right, Isabelle, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.